It's February 9th, and this, of course, the video log takes 30,000 to a million. I'm posting 3 days in a row. It's crazy, insane. So I'm gonna update you in the account real quick, and there's a lot to update. I've had a really good day today, and it's probably gonna reverse tomorrow, so I'm not getting too excited. Judging by the futures market, actually, let me check it out, see what it looks like right now. So it's mixed. Alibaba's actually down a little bit in HK in Hong Kong. It's sitting at 121 Hong Kong dollars, which probably equates to about 125-ish. I didn't do the calculation, but US dollars, and it closed at 126.5. So it's down a little bit in Hong Kong right now, and it's probably going to give some gains back. I'll be surprised if we had like 3 really nice days of gains in a row. But speaking of Alibaba, after I take you through the account, I want to do a little visual walkthrough of what Alibaba has been doing as a company over the last, several years, and to see like just what the trends are within the company. Just real brief, very visual, not a lot of numbers at all. Okay, so first, real quickly through the account. I know it's going to be zoomed out a little bit, so hopefully you're viewing this on a computer instead of the phone. But I want to have the full screen available for later. So these are my options positions here on the right. I'm going to scroll through fairly quickly. You can pause the browser at any moment to try to video player at any moment to try to find out the exact position. This will be all the information you need to figure that out. It was a pretty nice day. I'm actually really glad that PayPal bounced back, and I'm able to collect cash instead of shares of PayPal because I saw the put against PayPal. So here are my equity positions. Pretty good day overall. I really like that EBIX is starting to outperform, and that's definitely lifted the account quite a bit. And VipShop actually gave me $2,300 right here today, so I'm sitting just a stone's throw away from an all-time high, maybe $3,000-4,000 away, and I'm pretty happy about that. Everything else is kind of average performance here. If you want to see the account tab, this is what it looks like. My margin now is only 26.6% of my overall account. It was 27 point something just yesterday, but this big gains puts my margin percentage, it shrinks it as a percentage of the account. So I'm really happy to see that. This is all my stocks arranged by total return. See Apple at the top there, and then JD climbing up to second. Very nice after today. And then this is by equity. EBIX is number 2. And then VipShop and then JD at number 4. Okay, that's the account. This is the day's performance, 5.6% day. It's one day, okay? $10,500. Huge, enormous. If it wasn't for that 400 at the end, it'd be almost $11,000 in one day. I wish every day was like this, right? But definitely gonna give some back tomorrow. It's a little bit overdone, this push, but I didn't sell anything. I mean, I sold some calls, but that's just chump change. It's like a couple $100 or something like that I might be collecting in sold calls. I think I did it on VipShop, VIPS. This is the week performance, pretty strong performance, $12,000. It's 1 month, 16, and then 3 months chart is $10,000. So the account's been pretty flat for the last 3 months. $10,000 plus is actually quite a bit, but year over year, I'm sitting at 38,000 or 23.7%. So that's the account. Next, I want to talk about Alibaba. I'm going to do some visual walkthrough on stackanalysis.com. I think is the site that I like to do for visual. I'm just going to try to get a feel for what the company's doing. How likely is it to reverse trend? All right. Now, I know that there's been a lot of Alibaba videos out there, and everybody's like praising and doing DCF analysis and doing all kinds of fundamental analysis, some of the parts analysis. They've been doing, political, like macro analysis, all kinds of analysis. By every measure, it's undervalued, but this is a little bit different. It's kind of a visual, getting to know, to get a feel for the company kind of analysis. So I'm going to start over here with the statistics. Let me first switch over to the browser. So I'm starting off with the statistics. The market cap of the company, just a few numbers to begin with, is 342 at the moment, 343, and its enterprise value is 295. So that means that it has almost $60,000, $60 billion in cash. That's how you figure out how much cash they have, is by subtracting the enterprise value from the market capitalization of the company. Now, let's take a look at a few statistics real quick. So number one is their price to earnings ratio, which is sitting just below 18, and their forward price to earnings ratio, which is sitting under 14. Price to sales 2.7, pretty normal. So EV, that means enterprise value over earnings, is 50.3, and over sales 2.3, which is decent. You can see the cash here. So this is the cash flow. And I like this number here, which has been, I think, reducing lately, but it's still sitting at over 15%. Profit margin is where you want to look at. I think, in my opinion, it's probably the most important, because it discounts a lot of stuff. But all three are important to look at: gross margin, operating margins, and profit margin, in my opinion. Alright, now let's go to the visual part. We're going to go in the financials, and we're going to scroll through some of these charts. And the main point I want to make here is how the trend. I want you to see the trend and kind of like an overview of what's going on. Because if you just focus on one particular figure or trade, it's really easy to lose the big picture of what's going on with the company. So sometimes I like to do this and just scroll through and just figure out the trends and whatever's going on in the company. Okay, so maybe we can all follow along and see what's happening. So let's start with the revenue. The trend, yeah, but looking at a bunch of figures doesn't really tell the picture very well. But if we do this, all of a sudden, now we get a visual of what's been happening with the company. And this looks like an exponential graph to me, right? Now, it may be plateauing. We'll see. Like 2021 has been an incredible year. So this kind of shows the year-over-year growth, which is actually accelerated in 2020 a little bit. This number tends to go down if, as the company matures, the year-over-year growth. Cost of revenue is also exponential, but not as much as the revenue generated. This is the gross profit. Gross profit is a nice and steady increase line. So that's also growing at a nice steady rate. So other notable figures: research and development. They're spending more on research and development now than they've ever been, of course. Now the company is bigger, they can afford that. Operating expenses actually went down. And here's their operating income, which is flat from 2019. This is up to 2020, of course. We're waiting for the numbers for 2021 pretty soon. I don't know when the announcement's going to happen, and when they're going to do their call or whatever, but it should be in the next week or two. So pre-tax income. Other important ones is shares outstanding. So you can see they're kind of slowly diluting the shares, but it's not really that big of a deal. So they started diluting in 2013, 14, and they've been diluting just a little bit, I'm guessing to fuel some extra growth, but it's really not necessary because they have the cash and they don't have much debt, and so I don't understand why they're diluting the shares. Personally, that's not my decision to make. Obviously, people that are making the decisions are much smarter and know a lot more about the company and the dynamics and the laws and everything. So I just have no idea. But in general, just so you know, your ownership, if you hold the same number of shares, your ownership of the company, well, technically you don't own Alibaba, right? You own an offshore entity that holds a contract for the profits of Alibaba, but irrelevant. We're just gonna pretend that we own Alibaba here. So as the shares get diluted, they become more numerous. That means your percentage share of ownership, let's call it ownership for right now, of the company decreases ever so slightly. Okay, it's kind of like inflation. All right, so earnings per share diluted. This is the share change. You can see how they increased by 3%. So you can think of this number kind of like as inflation. So in 2013, the Alibaba stocks experienced more than 2% deflation, and then huge inflationary jump in 2014, 6.5, and now this latest year, 3%, which is not a big change at all. So that shouldn't really be. Plus, if the company is growing, even if your percentage of ownership of the company is getting reduced, you still own a smaller piece but of a bigger company. You see what I mean? So nothing to worry about there. Profit margin, so this is kind of the number that it's a little worrisome here. We quoted a 15% profit margin, which is quite the decrease from, let's say, 2015, which for some reason went up to 70%. Now, I haven't researched what that reason is, but it's very unreasonable to be up there. Probably some accounting gimmicks or whatever. These guys, especially in China, the rules for accounting are much different, and so they can put stuff in where it doesn't belong, let's say, on a US standard, kind of like generally accepted accounting principles type of environment. So we got to keep that in mind when we're scrolling through the the graphs here. Effective tax rate, they did increase the tax for Alibaba, for sure, in the infamous crackdown. All right. So I think that's about it. This is EBIT, earnings before interest and taxes and things like that. And EBITDA is just interest before, earnings before like interest, taxes, something, amortization. Maybe it gives me a definition. Earnings before interest, taxes, depreciation, and amortization. So there you go. It's kind of pure figures before they subtract everything. But the more useful number is the real number. This one's kind of like fake. In a perfect world, like what would they be earning, right? So this is Alibaba, a quick look. It gives you a little bit of a visual on how the company is growing, and I'm sure they massage the figures to have this like perfect line of increase. Illusion, not illusion necessarily, but to show that the company is growing evenly, where the other numbers are a little bit more uneven, to try to massage these numbers a little bit. But either way, the company's still growing. The profit margin is getting squeezed, but hopefully returns to a more normal state in the future. And I think that's actually a very real possibility. Either way, company is undervalued, of course. I'm going to echo everybody else and their mother on that out there. So I do hold leaps of Alibaba, which are long-term appreciation somethings. Long-term equity appreciation position, I don't know, forget. But basically they're long-term options that are held for like more than a year. So I have calls, I've bought call options basically for 2024. They came out not too long ago, so I just bought them when they came out. All right, I'm going to conclude it right there. This has been fun. So hopefully you all enjoyed that and maybe learned something. Okay, peace out.